Ladies and gentlemen, welcome to the Midday Market Monitor. In today's video, not only are we going to be looking at the stock market and exploring some cool ideas there, we're also going to be, talking about some of the news that's been happening recently. Shopify is in the news. I know no one wants to talk about that, but they're building something pretty spectacular with Google that I might want to have a few words about if you all will let me. But until then, let's quickly take a look at the markets. We got some companies that are red, some companies that are green. Duolingo down 6.5%. Capital One down 6%. Affirm down 6%. Upstart down 5.8%. Pagaya down 5%. American Express down 4%. Open Door down 4%. Citigroup down 3.7%. Honestly, I think that these are these are not appropriate reactions to Trump's 10% credit cap. But if you're a believer that it's potentially not going through, then these are appropriate reactions. These are slight bump ups. There are slight hits to these stocks, even though the potential catalyst, if this goes through, is that Citigroup could be making tens of billions of dollars less in interest per year. That's not a 3.6% hit to them. It's just a matter of if you believe that it's even going to go through or not. If this does go through, Capital One might literally be marked down as having one of the worst acquisitions of all time, which is Discover Financial Services, which was buying a lot of credit cards and a credit card network and all of these, different functions into one business, only for that business to sort of get blown up. How's it going, guys? Tanner, look at Noto's post 30 minutes ago. Okay, if he did a post, that's exciting. I was busy. I was in my other live stream 30 minutes ago, and we were going through Devin Ryan's report. Okay. Let's see here. First, thank you for listening to our SoFi earnings conference call in such detail. Let's see this. I have not read this yet. Why isn't it sharing? There we go. Second, you accurately captured issues with credit cards that must be solved in my quote. Third, an unstated but clearly observed, some banks and lenders don't actually want revolving credit card balances to amortize down. If there were no revolving balances, they would lose a significant amount of money due to the cost of rewards. Our SoFi personal loans not only carry rates at 10 to 12%, that's an interesting rate to choose. Your average on your personal loans right now is like 13.6%. But regardless, and on your website, it's touting itself as being a 16% APR loan. Anyway, that are up to half the typical credit card rates. But they also amortize and help borrowers get out of debt, ironically similar to our private refinancing student loans when compared to federal student loans. In which case, that is ironic. In some cases, last until death. Very ironic that some of the worst loans that you can also get are literally offered directly from the federal government. If you want to tackle something, Trump, tackle that. You guys are offering it, bro. For many banks and lenders, credit cards have effectively become subscription credit. Some customer payments are almost entirely interest each month with very little principal reduction. In some cases, they pay just enough to keep their line open so they can rely on unused credit for quote-unquote emergencies while avoiding delinquency and the loss of access to that unused portion of the line. Another issue I mentioned is rewards points. We just introduced the SoFi Smart Card, which offers rewards on only groceries, specifically 5% back on grocery spending. Why? Because people need to eat. We've effectively made food 5% more affordable. Correct. If I were to be nitpicky, it doesn't work at Costco or Target and like some of these like bigger services. Anyway. People who use the smart card are essentially giving a 5% discount on something that they must spend on in perpetuity. Who else is cutting the cost of food by 5% without providing other reward incentives that encourage spending beyond one's means? Our decision to offer 5% back on groceries was 100% purposeful, focused on non-discretionary spending. From your tweet, Anthony Noto, during the most recent SoFi fireside chat discussing the predatory nature of credit cards, it's a dichotomy. Banks are supposed to help you, but then they give you these reward points like a drug to keep you chasing without realizing you're building a balance that you're not going to pay off. You're getting charged 20 to 25% interest, and most people don't realize that they're paying that much. And so we're going after those people and refinancing them down from 25 to 12%. Here's the thing. I have some critiques about the 10% credit card. Obviously, I made a video about this yesterday. But if these people understood that there was an ability to go out and get a 12% personal loan, that service already exists. They're not ready to launch this service to a new cohort of customers whenever this 10% rate cap adjusts. You know, they're offering it today. So those people do not, like, personal loan holds, I think, a level of stigma to it, that whenever you're signing on the dotted line, you're agreeing to pay a certain amount of interest, okay? Regardless of whether that's going to be, you know, like we can discuss how much interest that's going to be. But on credit cards, those people don't think that they're going to be paying interest. They go, no, I'll pay it off. I'm not going to get hit with those fees. This is great for building my credit. And then they fall behind. They don't mean to, but they do. Okay. So my worry is that these people who are essentially what Anthony Noto is saying is like, hey, we're actually going to have the more effective product whenever this credit card cap comes in, and then all the credit cards that are around will essentially be canceled. They still need access to credit, and they're going to come to SoFi. It's like, I think that they're very different purposes. I think the quote unquote hidden fees, and which sucks, like hidden fees do suck, but it also allows for the size of the product to balloon to how big it is because people didn't realize how much they're going to be spending. You know? I'm living debt-free for 20 years thanks to Dave Ramsey. Yeah, I have a mortgage, but aside from that, I don't have any other debts. I have a ton of credit cards and still zero debts. So I don't know. Dave Ramsey's good, but it's not a perfect system for everyone. Is it still profitable at 10%? That's the real question. I think since SoFi has lower costs, this 10% will be good for SoFi. I'm not so sure. I really don't think credit cards are profitable at 10% at all. Like, I think Amex right now on their 24% cards makes about 11%. Okay. If you take away 14% average interest, you're lowering them below what they're making on average. You know, so that means the cash back, like all the reasons to use credit cards today have to be wiped away. That means that they are going to then put a monthly or annual charge on these cards. And the lower bound range of people who have a lot of debts that they're only making 10% on, they're just going to cancel their cards. And for real, Razor phone, you're probably right. This is just not happening. Every report I've read, like from smart investors, some of the smartest investors, is just saying like this is closer to recessionary causing than it is to helping consumers. Okay. Like, credit cards are bad. The same way that federally backed unlimited size of guaranteed loans for student loans is also a terrible product. You know, you've guaranteed Americans that they, no matter where they want to go to school, they can get that loan. But then all you've allowed is that the large institutions increase their cost of their tuitions. So you've ballooned that system. You've made that terrible. But price controls have never, ever been the way. I mean, everyone thinks of them being in like some sort of large conspiracy. Citigroup, Bank of America, Amex, Capital One, all of these, and they all decided on charging 24%. Well, what about Robinhood? Why does Robinhood choose a similar rate? And SoFi is toting their smart card here, which he doesn't also talk about as having an actual subscription cost of $120 a year. Like, they have 30% cards too, the unlimited 2% cashback card, all these things you don't pay back. You pay huge costs and interest. It's not because that's not getting your money right. It's just for the longest time, even now, that card is still unprofitable for them, even today. So, like, yeah. And then there is this sort of thing, right? Is if it is 10% and people do still have credit cards, why wouldn't just the reverse idea of refinancing end up happening in that case? Why wouldn't you just refinance your personal loans and your auto loans and stuff like this that are at higher than 10% down to your credit card rate? You know, pay your auto insurance bills with your credit card and then just have a revolving balance at a lower cost if you're somebody who has a rate that's higher than 10%. I don't think a lot of people have auto loans that are higher than 10%, but I've definitely heard of people having some pretty severe rates. If interest rate is capped at 10%, banks could let people borrow more money on the cards. What? Why would they want you to borrow more at less rates? How does that make sense? The mortgages are not at the interest rate that they're at because it's more dollars. They're that because if you don't pay, then they have a house. They go in and seize the asset. So that's the difference between unsecured and secured. If you don't pay your auto loan, they now have a car. If you don't pay your house, they now have a house. Okay? You don't pay your secured credit card, they take your money out of your bank account. An unsecured card, they have nothing to get back because you took their money and now they could what? Seize a plastic card from you? So, yeah. I mean, more dollars means more interest income. They're doing it today. They're trying to give you as many credit card loans as possible at 24%. You know? Banks would lend less money, not more. Tanner, look at the Noto reply. I saw his answer, but I don't. We just read his answer online. Thanks for listening to our SoFi earnings conference. Is that the one you're talking about? Here, let me see. Let me go on his X and see if there's another post. Maybe he's been doing some replies. No, I'm not seeing any. He answered me like whenever I said, we can offer here, so I asked him after his post because he ended up saying this long post. I just said, like, I worry that the average SoFi personal loan person who has, and I should have added in income as well, but 740 plus FICOs, 140,000 average income may still have access to credit cards at 10% because those people pay off their credit cards. However, the average user who actually needs credit, and what I meant is somebody who's making $50,000 a year, living paycheck to paycheck, whose FICO score is potentially below 700 because they've missed payments from time to time, the daily struggle, that those people are going to get into small dollar loans and payday lenders and stuff like this that are way worse. He said, we can offer those average users you reference personal loans at higher rates, which we charge our prime borrowers. Sorry, higher rates than what we charge our prime borrowers, but still attractive and lower than the 25% that they pay on credit cards. But you can do that today. What Trump is saying is he's going to bring this down to 10%. So you can't still compare this to the 25% credit card. But he does say something amazing in this, which is essentially that they are going to expand their credit box into a user base that is much larger than what they currently have. But if you feel confident in doing that today, or like you could get into that, do that now. Why do you have to wait for the rates to change on credit cards in order to get into personal loans that are saving people money, not paying 25% on their credit cards? Okay. Yeah, this is true too. Robinhood has cheap margins, so you can take out cash from there whenever using a long-term stocks as collateral. That's what I'm doing to pay quarterly taxes versus selling short-term gains using margin. Yep. Yeah, there's a lot of great credit tools out there for sure. But that's what I mean. Like credit cards, like Roy said, HELOCs are going to bloom from this. Like, bro, if people weren't paying back their credit cards and they're paying 25, 30% on their credit cards as interest, and they have a home and they have access to home equity lines of credit, why aren't they doing that today? You know? Okay, someone said check Meta, down 0.8%. Sad time. BMNR. BMNR is up 3% today, by the way. They ended up showing off their new purchases, which just continue to fall and fall and fall. So, yeah. President Trump just tweeted. Hold on. This is like 2 minutes ago. The actual numbers that we would have to pay back if for any reason the Supreme Court were to actually rule against the United States of America on tariffs would be hundreds of billions of dollars. Wait 1 sec. Would be hundreds of billions of dollars. And that does not include the amount of payback that countries and companies would require from the investments that they are making on building plants, factories, and equipment for the purpose of being able to avoid the payment of tariffs. When these investments are added, we are talking about trillions of dollars. It would be a complete mess and almost impossible for our country to pay. Anybody who says that it could be quickly and easily done would be making a false, inaccurate, and totally misunderstood answer to this very large and complex question. It may not be possible. It may not be possible, but if it were, it would be dollars that would be so large that it would take many years to figure out what number we are actually talking about and even who, when, and where to pay. Remember, when American shines brightly, the world shines brightly. In other words, if the Supreme Court ruling is against the United States of America on this national security bonanza, we're screwed. President Donald J. Trump. He's got some way of talking, honestly. It's true. When America shines brightly, the world shines brightly. It would be dollars that would be so large that it would take many years to figure out what number we are talking about and even who, when, and to where. Yeah, I don't know how the Supreme Court is going to rule on this. What does the poly markets and all these things say? Actually, I'll do Kalshi Supreme Court tariffs. We are now sitting. Okay, no, this is just when they're going to issue an opinion. Where can I see? Will the Supreme Court rule in favor of Trump tariffs? I think that's sitting at around 27%, but the thing is all messed up. Kalshi's having a little bit of a bug. I don't know what's going on here, but it's telling me it's about 2.009, 0.00%. I don't know how to read that, but I think just based on where this line is sort of adding up, that we're probably around the 30 percentages is what I'll take. And yeah, I had to buy this contract, it would be 30 cents. So I don't know what the percentage is trying to tell me. But yeah. I guess yeah, it says just around that is what it's trying to tell me, is it's just around 2%, but that clearly is not. So to rule in favor of Trump tariffs is at a roughly 30% chance. That's no bueno. Okay. Polymarket is saying Google ends the year with the highest market cap in the United States in 2026. Gosh. I think Nvidia, or I think Google's going to do well. I've got no doubts about Google. But like, come on, Nvidia's got the head start, and they're growing faster, and they've got higher margins. What's with the hate? What is with the Nvidia hate? Don't say diversification. Do not. Look at my freaking hat. Okay. Look at their market cap. No, I get it, but they're like $500 billion behind. 3.98 trillion. But I guess during this spike, it probably went over 4 billion. But yeah. Tanner, as a Canadian spokesperson, what are your thoughts on Trump's first year back? I'm not a Canadian spokesperson. I don't talk politics on this channel for the most part. So I don't have anything to say. Fidelity just sent me an email about diversification. Well, maybe you're a little too focused. A little too concentrated, I should say. Do you think we get SoFi above $30 after earnings? I think it's definitely in the realm of possibility. Here's why this earnings is so important. It's Q4, which means we get insight into full year 2026. They're going to do guidance on that. They also can open up the possibility of doing some sort of, here's what we think is going to happen by so last year, 2 years ago, I think it was 2023, they gave us the 55 to 80 cent guideline for 2026. Now that we're essentially approaching 2026, are we going to see, 2028 guidance? There's that possibility for the earnings call as well, along with 2026 guidance. There's so much transparency that we're going to see this quarter, let alone what I think is going to be their fastest ever growing quarter, highest amount of growth, best margins that we've ever seen on the business, a showcase for all of their new products, and potentially talk on Galileo and how that's ended up accelerating their product cadence. There's so much that we're going to see this quarter. That's important. Okay. Think Google getting this high sort of confirms that Nvidia is not overpriced. Like, Mark Edgar, I think is actually how you meant to say that, or how I should read that. Completely agree. Google's going to go up because of artificial intelligence, but the chip plays definitely not. Isn't that funny? That's the same thing with the energy plays and all of these things. It's all one connected ecosystem. The biggest player still remains by far NVIDIA. So if you give premium to one, you're giving a lot of runway, unless you believe that the Google chips, the TPUs are so good that they don't need NVIDIA. And we're just not seeing that yet. Okay, so this is why someone said check out Meta earlier. Today, we're establishing a new top-level initiative called Meta Compute. Meta is planning to build tens of gigawatts this decade. And you're holding NVIDIA down. Okay. And hundreds of gigawatts or more over time. How we engineer, invest, and partner to build this infrastructure will be a strategic advantage. This effort will be led by Santish Janardan. I'm so sorry. And Daniel Gross. Daniel, I can do all day. Santosh will continue to lead our technical architecture, software stack, silicon program, developer productivity, and building and operating our global data center fleet and network. Daniel will lead our new group responsibility for long-term capacity strategy, supplier partnerships, industry analysis, planning, and business modeling. They will work closely. I'm done with names. Dina, Powell McCormick, I could have done it. I'm just being a loser. Who just joined Meta as president and vice chairman to work on partnering with governments and sovereigns to build, deploy, invest, and finance Meta's infrastructure. I'm looking forward to working closely. So wait, he's just saying that they're going to put out... Meta Compute is just saying, hey, we're going to do tens of gigawatts and hundreds of gigawatts or more over time. Is that what it means? They're going to be competing with Azure and AWS? I mean, they like at that size, they would absolutely be. Couple metaverse pictures. Why not? Okay. Yeah, they could definitely get into enterprise cloud. I mean, but how do you bet against NVIDIA with reports like that? How do you do that? I don't know, just bought more Meta just in case. Yeah, why didn't we buy the names that would benefit the most from this? Where's Okla in this news? They just did a down 2.4%. NVIDIA up 1%. They actually, I think, are responding to this news. We are seeing definitely a tick up. Like, but this is the infrastructure build-out. We are not in the end game here. You know, NVIDIA is leading the charge. He knows about the products that are coming out. And yes, trajectory can change really quickly if they believe that there's another DeepSeek moment or something like this that just drastically lowers the total cost of token generation. Maybe this happens from a chip perspective as well, that there's major breakthroughs. Like a lot can happen. But come on. Okay, actually, I just got a report on Oklo's CEO was actually on CNBC to talk about the Meta deal. So let's go have a look at this and see what we have going on.
Welcome back. Take a look at shares of Oklo, up 30% just since last Monday after announcing an agreement with Meta to support the development of a nuclear power campus in Ohio. All as some of the biggest names in tech look for new ways to power the AI boom. Joining us here first on CNBC is Oklo co-founder and CEO Jacob DeWitt. You know, these big deals keep coming. Jake, how did the Meta one come together?
Hi, Sarah. Thanks for having me again. Yeah, Meta put out, about a year ago, basically a request for proposals, a call to sort of get some insights about what might be possible in the nuclear space as they were planning their kind of strategy around the spot. And we were very excited about, being able to partner with them and bring power to their needs, specifically in Ohio. And I think what's cool about this is this sets kind of a really important stage for what these kinds of deals with these companies can look like, right? Which is helping drive project certainty, gigawatt scale type deals, pretty significant.
So what is the timeline now? How quickly do you expect the approval and then the deployment of this energy?
Yeah, so a couple of years ago, we announced that we were going to be building a couple plants in this area in Southern Ohio in Pike County. We were really excited about what the infrastructure looks like there, the opportunity space, the familiarity they have with, frankly, industrial infrastructure and nuclear. This just moves all of those timelines to move faster and at a bigger scale. So, we're working towards basically bringing up those, putting power on the grid and scaling that forward in kind of the late 2020s, early 2030s on a ramp up. We're doing 75 megawatt plants. You think about that, that's 16 of our plants to meet this 1.2 gigawatt scale. So we're going to be building that, on that site kind of as the project progresses and scales forward in that timeline. But what's really important is this drives forward the fact that this is going to be happening there at this kind of scale, putting power in front of the meter. It's going to be pretty significant in terms of powering what Meta needs, helping their needs, but also helping on the grid side with the grid stabilization effects that can happen from having this kind of generating capacity on the grid.
What kind of price are these reactors?
What we really look at is, right, our business model is really different. We're not trying to sell the reactors, we're selling the power. And as validated by what Meta announced with us, what they announced with Vista on stage, what you've seen the other big power consumers announcing is they want to buy the power. They don't want to buy the power plants. Well, that's great. We saw this in the market a decade ago. So when we started the company, the view was we need to offer a different solution, frankly. So we design the plants, we sell the power from them. And the power pricing, it varies by each customer and site. Obviously, with some of these hyperscalers, they need the power urgently, and they're going to put some money to work accordingly to do that. And they have pretty deep balance sheets to support that. But that then helps get those initial plants built and then drive those costs accordingly down. The first plants are always going to be a little bit more expensive, but they're going to be able to have then a run rate to scale downward. And when you think about building 16 plants, there's a lot of repetition and learning you get to go. When you look at the last time we built nuclear plants, the second plant costs about 30% less than the first plant. So having a number of 16 really helps us drive down to sort of that, I'll call it steady state cost curve, if that makes sense.
Dude, the AI trade is not over. It's not even remotely over. Like, yes, you could see some sort of extremely fast pivot or shift from names like Meta because they're having other companies do a lot of that big build out. And although they have large signed contracts and they are spending in capital expenditures, they can cut that off pretty quickly. But I don't think that they will. And as long as one name is running super fast like this, then that's what creates that prisoner's dilemma, right? If Meta's moving this fast, and if, as Parsival put it in chat, where's Parsival? Absolute gem, by the way, in chat. Say hi to him. If they do want to compete with Azure and AWS and Google Cloud and the likes of this, and that's why they're building out potentially hundreds of gigawatts over time, not just competing against their own American competitors, but actually maybe putting up like a little bit of a bat signal to say, hey, we need to compete directly on the energy space and chip demand versus China here. Well, one, that's very exciting, but then that also forces Azure and AWS and Google Cloud to do the exact same so then they don't fall behind. Okay. That is insane. 1.2 gigawatts is roughly 50 to 70 K. What do you mean K? It's about 50 to 70 billion dollars. A data center that's 1.2 gigawatts is about 50 to 70 billion. Not K. Oh my God. Yeah, it's definitely billion. Tanner, I must confess, I loaded Nebius at 85 without doing much research after your live with Steve. Confess less with me, my friend. Okay? Go to church for that. You don't tell me that. I want to know that you guys are doing your own due diligence. I also, what's scaring me? Like whenever Nebius is a big name. Okay, so I say some things on it. I've never felt like I've moved a big name like Nebius or something like this. I just have such a small audience. But I do get worried sometimes, like, we talk about like one-stop systems, and I'm like, okay, this company's up 23% after stock talk myself and I still do not have a position in it. So hey, regulators, get off my back. I'm just saying I wanted to, listen to a couple firesides. I didn't do a thing. But that's up a lot. Edge compute might be a very important space. If Meta is wanting to build out tens of gigawatts, a lot of companies are trying to get to a gigawatt or 100 megawatts. You know, to have a very large space in the data center space, you need about 100 megawatts. They want to do hundreds of gigawatts eventually, which is 1,024 megawatts or whatever. That's a lot. That's a lot. I think that if they are going to do that, edge compute, military, all of these things going to be a very important space. Tanner, please make a video teaching us how to do best due diligence. Not to be a promo kind of guy, but that's kind of what my futureinvesting.pro whole thing is about, talking about my core principles. That's another thing too, okay? I was saying online, you know what, like it got blown up on Reddit and on X and everything, because I said that if this 10% cap does go through, I would think about selling SoFi, okay? For the long-term viewers of my channel, you guys will know that I'm anti-marrying stocks. I'm anti-investing in things that are against the administration. And that doesn't mean against Trump. That doesn't mean against Kamala. It means against whoever's in charge, because who sets the rules has quite a significant power. And if you guys are new to investing this year, then you might not know what this feels like. But there was a name. What's the name of it now? This is how out of my mind this company is now. It's the solar. They sell the inverters. What name is this, please? It's not Sunrun. It's not a Solar Edge. It's now you guys. Enphase. Thank you. Enphase. Enphase was a Wall Street darling. And then Trump got into office and he said, in no way are we going to give any support to solar companies. He didn't ban solar. He just said the government incentives that are coming in to help people put solar on their own roof and to get these tax incentives and all of these things are going to go away. And this company got obliterated. It's gone down more than 90% since its high. Okay. To step in the way of an administration and to say, no, although he's going to cut our earnings from 24% credit cards down to 10, we can withstand and we will survive. Investing is not about buying something that will survive. I've got no question that SoFi might still continue to even grow past these types of changes. What I worry about is that it would affect growth rates and have people adjusting their EPS targets for 2026 from, let's say, 60 cents down to 50 cents even. That's no bueno, especially for a company that, I mean, it doesn't have a premium in its stock price to growth, to long-term growth targets, but it does have a premium versus its peers on trailing numbers. Okay, so I'm not even selling SoFi, but one of I have principles. I have core tenets of investing that I like to stick by. And I just want to be honest with you guys and how I'm talking. Like if I'm talking in an open forum and I'm just like with close investing friends, Tevis, Roy, Steve, and I'm just talking to them about how I'm feeling. I'm not a traitor to the community. Let's relax. I'm just trying to do my due diligence and try to protect my capital if there is a risk that's about to come about. And by the way, I think Noto's a great manager. I think there's a lot of great stewards of capital. But it doesn't necessarily mean that you're always like, I think after my talk with Stock Talk and everything, opportunity cost and assessing risks needs to go up on my priority list. And I think versus regular retail investors, I still care a lot about risk, but I need to care even more because the premiums that companies hold up is only in this point in time. Like back whenever SoFi was at $4 a share, and they were still growing. Like there was nothing really that was impeding. I mean, there were some worries, but man, every 1 minute I'm getting a freaking ping on my phone saying that I've got a meeting later. I get it. But like SoFi stock can get re-rated lower if people start to think that they are trading lower or that there could be risks. And not even something that's material, but just potential risks to unsecured lending. Why stop at credit cards? Why not go to personal loans and buy now, pay later? And all of these other tools of credit that are being charged at really high rates to consumers that are hurting Americans, quote unquote, hurting Americans. So I'm just protecting myself. I'm just talking through my thoughts. And I want to do that on open forums. And I'm not a traitor to the community or anything like this. I freaking love SoFi. But if I would have seen before as an investor, whenever I bought at 14, it went down to 4. You know, I got my average down to 7. But would have been a better play is me for that 2-year period, buy the SPY, and then whenever I'm down all the way to $4 or $5, then I get into SoFi. So I would look, me, not you, me, to reduce my holdings in financials if this goes through. Like I think it's bad. I think SoFi can survive. I think they might even find new avenues of growth. I think it's more negative than positive. I think that Anthony Noto saying that he hopes that it's enacted is it rallies the troops. I don't think he believes it. I think it's recessionary. I think it's bad for everyone. And for real, I think it's Trump talk, and I'm not worried about it. I'm not timing the market. That is not timing the market. That's me seeing that's like if we end up going to war, like before World War II, and you see that like Pearl Harbor just happened and America's about to go enter into the war, and then your neighbor ends up selling stocks or something. You're like, this guy's timing the market. I'm not saying that, like, I'm not looking at charts, and I'm timing the regulation. I'm timing a clear hit to financials. And by the way, I don't even have to time it. It's January 20th. Like it's written on the walls. I'm not raising fear. I'm saying it's not going to, this 10% thing is not going to happen. Okay. He's winding up. Yeah. I'm having fun. Battalion Carlos, by the way, were great investors. I think the only thing that they didn't see with Enphase is that you don't step in front of an administration. You get out. Sir Joseph Carlson. Well, I don't call him Sir Joseph Carlson. He's a gem. Posted about Google. It would be funny if this became the anti-SoFi channel. It never will. I'm not a SoFi shorter or anything like this. I just think I see something from Meta and I see Trump and Trump's comments. You don't have to be a supporter of his politics, but you have to realize that, the things that he's supporting and things that he's not has very material impacts on those companies. And so whenever he gives green lights to new data centers being signed, like approvals for new CHIPS acts, and all of these things are getting expedited at every turn, he is greatly supporting those industries. He's taking his government powers and putting it, he's pushing that industry forward. Whether or not you like him or not, it's helping AI names. And a lot of his deregulatory things, like saying that, he wants to sort of allow banks to be banks and step away from that, was extremely bullish. But then putting price caps on companies and stuff is not. And that's anyway, it's not going to go through. I'm just telling you guys what I'm thinking, but then you guys are trying to get me into angles and box me in and all this stuff. I'm not having it. He greatly supported crypto, and I'm a big supporter of crypto. So you can look at the price target today, but I actually think some of these crypto names, Robinhood, Coinbase, even BMNR to an extent, as long as management doesn't mess that up, that there will be a lot of growth on crypto because he's supporting it. Okay. Tanner, don't time the market. Okay. That's utter BS. Okay. No, I like if before Visa and MasterCard were a thing, I wasn't alive. And I started seeing everyone go to McDonald's and spend via cash. And then I slowly started seeing these plastic cards come in, and people were putting more money on these cards, and the network was growing and over. Like, I'd like to think that I would have been able to have seen that coming. I think that crypto, not based on speculation, but based on utility, is a clear opportunity for me. And with the Genius Act, with the Clarity Act, these are not things that I want to step I want to use those to my advantages. And to say they're not working because look at the market and we're lower right now, that's timing the market. The regulation's clear to me. Bro, I'm in Argentina. Everyone's using stablecoins for everything. Yeah, because, the US dollar is stable. Is Bull undervalued now? So I don't know about Webull, but I did end up receiving Devin Ryan's quarterly report. Devin Ryan's the 11th most best performing analyst on all of Wall Street, and by far the largest whenever it comes to fintech and investment banking and these sort of things. Also a huge proponent of crypto. He has identified a name that in his report, he actually has a price target on this company that's about a positive 200% upside or a 3x. Okay, he's calling for a 3x on this name over the next year. It's not Webull, but it's a very close competitor. I'm going to be doing some more due diligence on that name, but hopefully we'll see some videos come out soon. I can't share the actual report with you guys. It's not allowed to be public facing. eToro, maybe it's eToro. Maybe it's Hood. Maybe it's IBKR. I can share the name. I was trying to be more, create curiosity. But if you guys don't like that, it's eToro. But I thought maybe it might have been cool to, hey, wait for the video. You guys broke me, okay? I'm easily broken. But I can't share the report. I'd get in trouble. He held for 10 seconds. Well, I don't know. I didn't want to you know. Anyway, I am going to make some videos on eToro to not because I'm a believer. I actually have taken a few like first glances at that company, just like see what's going on. And I wasn't impressed the first time I saw it. So I don't know if anything's going to change, but yeah. He for real thinks that the company is going to 3x. He called for a $90 price target. I think it's $32. Tell us more about what you've learned from Stock Talk. You're very positive on him. Well, I'm positive on it. Like, I think every good investor. You know, I don't necessarily see eye to eye with everything that he said. Like, I mean, I think that there was a lot that we definitely disagreed on, but I still have to respect it. He's done well. So, yeah. Nebius up almost 10%. Let's see this. Wow, 107. 107, ladies and gentlemen. Holy. And you know what's funny? I still think it's cheap. I still think it's cheap. Who am I, though? It could definitely fall a lot more. So I, you know, please do your own due diligence. Potentially use Fiscal AI for that due diligence. Fiscal AI/future. Actually, you get a full free year and half off every year after that if you go to futureinvesting.pro. But what's it called? Nebius is, if like Mark Zuckerberg's right on this meta compute thing, tens of gigawatts this decade, hundreds of gigawatts long term. What does that mean for the growth trajectory of a name like Nebius, who already owns their own data centers, who has a large deal with Meta already, and is working with, many of these companies? Tanner, out of the greats, the Charlie Mungers, Warren Buffett's, Peter Lynch's, who's your favorite investor, or at least the one you feel is the most knowledgeable? Well, I mean, out of those guys, like Charlie Munger is something extremely special. I don't think he's as salesy or as personable as a Warren Buffett, but I honestly think a lot of the genius behind Warren Buffett was truly Charlie Munger. And I still think a lot of his ideas on, no bottom of the barrel fishing, no cigar butts, buy amazing companies at fair valuations, which seems anti to the way a lot of people invest today, is still so important. Just like, to me, that just screams buy the Meg 7. There's still an unbelievable amount of opportunity left, because you can have the same type of buyers look at those as value names. You can also look at them as growth names. You can benefit both ways. Charlie Munger's probably, I would say, the greatest investing mind that we've ever had. But like what I like about Peter Lynch, and also what I don't like about Peter Lynch for real had like a 13-year stint. It's like a flash in the pan. In a few years, I will have been investing for 13 years. He was amazing during that time. But like, I recently saw like a video on Peter Lynch, like, and he was, I forget how old he is now, but like, he was that age. He's saying the exact same things he was saying 30 years ago. Like, nothing's changed. And I feel like the way Warren Buffett, the way Peter Lynch, the way Stanley Druckenmiller or Don Valentine or any of these guys had invested over time has changed over time. And yeah. So I like Peter Lynch a lot, but I think I like Charlie Munger better. What short positions do you have right now? 0. I never, ever, ever short. You'll never see me short. Okay. Okay. I own 8 stocks, reduced it down from 12 last year. 55% of my portfolio is in AMD. I don't even think like that's a bad thing. If you're a huge believer in Lisa Su, you're a big believer in the AI play. Infrastructure is, as Dan Ives would say, we're still at 10:30 at the party. And you're doing fine. Hey, Tanner, where can I see your complete portfolio, including the allocations and holdings? I hate to say it. Futureinvesting.pro. It's in the description. For real, guys, I know I've been saying it a lot, but the new offering that we have there is just insane. I do an hour-long daily live stream. Like that Devin Ryan report, we went through the entire, well, not the entire thing, but we went through a good amount today during that live stream. I can't share it publicly, but for those people, they just have it. So we've only done, was it 9 live streams, I think, since it's actually, since the new update has gone out, but we'll be doing that for a long time. It allows me to get a good read on the day and warm up to being on the camera. So I actually feel better going into my main live streams because I had just done an earlier one. Plus, we get to talk about a lot of things like my portfolio and the allocations and the performance and all that stuff that I don't talk about here. Live streams are posted on the Discord, correct? Tanner, after the weekend, have your thoughts on SoFi and the credit card interest rate cap changed at all? I just think it's not going to go through. Do you ever offer discounts on the membership? For real, I've offered 2 discounts ever. I've been offering it for 2 years. I've offered 2 of them, and they were both 1 year apart. I think there's only 3 days left in this one. And not only is it a discount on time, but there's a discount on the amount of members that can join. So I never do, never do promotions. Or I should say very, very little. Okay. Will we get to see your losses? Absolutely. Absolutely. BMNR is in there. Yeah, there's a couple names in there for sure. Less about, I honestly think there's less about losses in terms of names that I'm like losing on and more just straight opportunity costs. So ServiceNow, Salesforce, Airbnb, BMNR, these names have not like lost me a lot of money. It's more about like, okay, well, if I just had a larger portfolio in Nebius or Nvidia or SoFi or especially Robinhood, I should have gone into Robinhood way faster and way more aggressive than I initially did, because that was, one of the greatest positions that I could have put my money in. So I got in at around $16, but just not as heavy as I probably should have. Why is Nvidia up today? Probably just a general sense that they're not slowing down, and the meta comments don't hurt either. I'm in on Zeta. Yeah, I'm going to be talking to some people with about Zeta. New Year's resolutions are still intact. In fact, I've been really trying to get continue my fitness journey, but I wanted to try new things, see what I like. So I really want to get more into running and cardio. I feel like my cardio has been hurting since I've been sitting all day. And I don't think the weight training and stuff like this is helping as much. So anyway, as a version of sort of helping with a little bit of strength, but mainly cardio, I did hot yoga last night. Went to a class, did an hour. I can't believe how hard that was. I used to do it before, and I was getting into some pretty good positions before. I could not do it. It was insane. So to the girls who are killing me in front of me, yeah, congratulations. That's a hard class. Let's see it live. Yeah, that would be brutal. No, I just meant like the girls that were in front of me who, I mean, I thought like I was in good shape, you know, and they're just nonstop, every pose, kept it going. I could not keep up. My mat was like a Peloton mat. Okay. Buy Lulu stock? No, I just wore shorts. Just wore shorts. Take your shirt off. Let yourself sweat a little. Because like I do a lot of sauna activity. So that's the one part that I like didn't have a problem with. The heat was fine, but the cardio and heat kind of killed me. Like the trying to catch my breath. That freaking killed me. But how is Lulu stock? Lulu stock's up 3.4% since I started going to yoga. There we go. Nebius, great run into the power hour. You have to do skip roping. 15 minutes forward, 15 minutes backwards. No. Tanner's been bought by Lulu. I've been telling you guys for a long time how much I like Lulu products. It's actually phenomenal. I don't know how replicable. You know what? For real, just unsubscribe. That's time to go. Like, I don't know if Amazon and like Kirkland brands and all of these things are just going to be able to steal Lulu's stretchy pants and then they can't offer the margins that they've been offering. Like, I'm not saying that the investment case is there, but the shirts, the quarter zips, the ABC pants. I mean, I've got it all and I love every single piece. It might be like actually like one of my favorite clothing brands for men. And no one knows about it. It's a secret little gem that only the metrosexual men's in the audience will even have the confidence to say that they wear. And it's the best. Okay? It's phenomenal. Dude, no way Lulu's actually. I mean, it's good. It's good stuff. Larry knows. Larry knows. Okay. One Stop Systems is up 28%. This is now a $10 stock. I've been just watching this thing going up, not entering it, and I was looking at it at $190 million market cap. That's 250. I'm just watching it pass me by. Andy knows. Look at Andy with the glasses on in his picture, too. This is a confident man. He gets it. Amit just bought? Like what? Just today? Or like he like tweeted it? Oh, no, he did tweet it. Let's see. The OSS thesis is very real. It's a small cap with various risks, but the thread below has a great job of explaining what's going on here. Edge compute might be one of the greatest themes of 2026. Prototype contracts they got last week is what's probably continuing to bring more awareness to this name. Took a small position. Obviously, it ran up heavy today, so waiting for a dip to make sense. So waiting for a dip makes sense, but the thesis here seems very strong. Yeah, they are. Edge compute's a pretty cool idea, and I think it's like a good proxy on top of my Nebius plays and NVIDIA plays and all of these things, which is just data centers are needed. It's the most important, probably new ad that we're ever going to have in markets for the next 20 years. And it's going to be needed everywhere. And that, how our military is going to fight out conflicts in the future. Is it going to be soldiers digging trenches to then fight across a battlefield? Is it going to be tanks? Or is it going to be, my data center on this side and your data center on that side, and there's a swarm of robots and drones and all of these things that are taking each other out, and who can sort of defend and destroy the other side's data center, so then the robotics fleet and drones and all of these things end up being useless. Like, it's kind of interesting if you believe in that. Up 28.7%. Is there military applications to data centers? Will we need data centers that run locally and in an environment that's not so clean, an environment that's not so stable? And how many players are actually there? Is Oracle going to get into these contracts, or are they just way too small? Any single whale can sell half and dump the price like boom. Yeah, definitely. But then if you do find a whale that actually wants the stock, like you say that the other way around, you find some investors that have $80 million that want a decent percentage into this name, you are making a material change in the stock price, as we're seeing. It's up 29% today. After lessons, stretching 100 each of pumps, abs, pulls. After that, begin again with seals. I feel like I'm reading a new type of sentence. Yeah, Triple V could buy this company. Is that not crazy to you guys? Like, if Triple V just wanted to get into edge compute, like a viewer of a YouTube video could just own this company. No word of a lie. Anyway. Amazon fighter drones are the future. How much does Amazon get into military stuff? I mean, I'm sure AWS has probably some military applications, but yeah. I have very accurate estimates of his net worth. I'm just not going to, I don't know if he would want those shared but yeah. I've met Triple V. Very nice person, but I also don't know what is disclosed and what's not, so I'm not going to say anything. But yeah. Let's just say that whenever we went out to dinner, it was a very nice dinner, and I didn't pay. Okay? And if we probably went out to dinner for the rest of our lives, I probably wouldn't pay. All right. It's 250 million. 257 million now. Yeah. And some of the growth aspects and stuff like this, I like it. Like, it's not a slam dunk name. There is a lot of risks here. What does Triple V get from socializing with you guys? We're cool people. But Triple V is much closer to Amit than myself. I mean, I've met him, but I don't know him like that. Not everything's got to be like a transaction, though. I mean, I pay for dinner everywhere I go, and I'm not worth anything close to Triple V. He should have bought you a car. No. That's very funny, though. Still not interested in PayPal? Honestly, not really. And it's not because the price is not attractive. Okay, $53 billion company. Let's go to Fiscal AI really quick, because this will show you guys something that, like, whenever I look, there's some names that look good on charts, and there's some that don't. OSS, you pull this up on Fiscal AI, you're not going to see any of the value. You need to go through the earnings calls. You need to understand the thesis. You need to believe in management. That's what you're paying for right now. You're not paying for the growth today, which, practically doesn't exist. You're paying for what you believe are large military contracts that are going to come into the future. And what's the likelihood of that happening? PayPal, we're kind of past that part. You're not going to see some large deals. They signed deals with Microsoft recently. They signed deals with OpenAI. The stock doesn't even move because the total amount of transactions that they see on a day-to-day basis without these large contracts change. Like it doesn't even change the broader number. That being said, whenever we look at PayPal, there's a couple things that I think are interesting. Okay, total revenue percent change is at 7%, but that's not even really where we're expecting Q4. It's going to start heading back down below that sort of 2 to 5% range. Okay, somewhere down here, hopefully, well, not hopefully, but that's what they're expecting for next quarter. So that's why, like, no one's really all that excited. I think we can actually pull this forward. Wow, Wall Street's actually thinking it's going to be 5.3%. So Wall Street thinks it's going to be 5.3% for December. If that happens, good. But yeah, so not a lot of growth. The interesting part, whenever you're a sort of an investor in value companies, is this buyback yield. The buyback yield on PayPal now is essentially 11%, 10.86%. That's so crazy. Like, so every year that goes by, keeping up the amount of buybacks that they already have, they're giving you essentially an 11% yield on your money, which is like what the S&P is expected to do every year, even a little bit more, depending if you're looking at like the last 30 years. Okay. Then if we go to full shareholder yield, which would include dividends and buybacks, dividends, buybacks, and debt paydown, we're now at a 12.66% yield. That's crazy. So regardless of their growth, regardless of if they can improve EPS, if they can improve their statistics and their KPIs that hopefully bring more money to them over time, what you're seeing, and we can drag this out very, very far, this is at the highest level that we've ever seen. This is what always drags me back. Oops, sorry. Let's go here and then let's go to here. This is what always drags me back. We're at the highest shareholder yield that we've ever seen on PayPal, ever. But for real, no one cares. People are worried that there's such a shift in stablecoins. Visa and MasterCard are, building up large platforms and other value-added services. Stripe, Adyen, a lot of these companies are doing very well. On the point of sale side, Toast and Shift4, some of the newer, faster growing names. Like, no one cares about PayPal. People worry, just like Western Union or some of these names, that like you can have a company that remains this cheap for 5 years and no one even blinks an eye. The only problem that I have with thinking about this business doing nothing for 5 years is if we hold up a 12%, buyback yield for 5 years, you're buying back more than 50% of the company. Like, so I don't know. I think that this company probably finds an exit through acquisition. Like, does a Apple or something like this that really wants to get into the payment space and like just have a dominant space there, is paying $70 billion to buy all of PayPal, 400 million, 800 million vaulted accounts. Like, is that worth it to them to get a company that's trading? It's not that you're just buying the PayPal ecosystem, right? You're buying a company that's essentially 13, maybe 15 times PE. It's probably even lower. That's at the time of, now we're at 11.5 PE. Like, that seems interesting. Does a Visa buy them? I don't know if a Visa can buy them. That's the only problem. Visa might have some, like they might not be allowed to buy them. Anti-competitive, antitrust type worries. A company like Apple wouldn't really face those concerns. So I don't know. And plus, Apple hasn't done a dang thing. So like, yeah. Yeah, plus PayPal is just riddled with cash. So like, I don't think they're 1.6 cash. That doesn't make much sense. I think they have like $18 billion in cash. Something like that. But still, like you're also paying for them, and a large part of what you're paying for is simply cash. Shift4 could buy them? Yeah, maybe one day. I always thought that PayPal should buy Shift4. Other way around. Cheap name, fits right into the ecosystem. You get every hotel and stadium and all of those. It would just be such a great brand thing. So by the way, Shift4 just had a fireside chat today. So if you guys are on Fiscal AI, for example, you can go to Shift4 Payments and then go to Investor Relations. This is from today. It's like,
all right, everyone.
You can listen to it.
To change. This is a business that for 27 years has.
Okay. So essentially what Taylor ended up talking about for this was, and we can make an AI summary here, but that they are still continuing to grow. They want to end up focusing even more on their acquisition strategy. They think it's just working. Like, they have no problems with the way that they're acquiring businesses. I know everyone wants them to grow organically, but they're not seeing it that way. They're just like, hey, why would we give all of our money to Google whenever we can just buy businesses that add on to our tech, that we can cross-sell to existing members, take on all those merchants, and then increase the take rate on those merchants? So like, it's like a triple whammy for them. And they've done this to so many businesses, and then they end up cross-selling even more services to their existing customers, and the cycle repeats. But yeah. I'm impressed with this platform. I love Fiscal AI. And that literally everyone does. So like, I know I seem like promoty about it, but like Chris Patel, Roy, Amit, all of these guys that use, like, you'll find hedge fund managers now. I saw, who was it? But he posted a thing online. It was using Fiscal AI. And I was like, man, even him, like, you probably have access to Bloomberg. Why'd you use Fiscal AI? But yeah. My brother uses PayPal. I use PayPal from time to time, but we don't really have Evan. Evan uses Fiscal AI. I never saw Amit use it. All right. I'll show you. I'll show you right now. Amit's not like he doesn't like partner with businesses and stuff like this. So it's even better because he's not getting paid to talk about these things. But I will I'll prove to you. Bear with me. I'm on Amit's X account right now. Okay. So if I go to one of his deep dives, let's find one of his more recent deep dives. What were some of the companies that he's deep dived recently? How do I just go to his Substack? What's his Substack called? Why doesn't he have a link tree? Get a link tree. I don't know how to get to your Substack. Amit is investing Substack. Amit's deep dives. Okay. Yeah, I mean, that works. Okay. So his most recent one, December 23rd, was Zeta. Okay. And if you look through, you know, he's got a couple different charts, but then, oh, Fiscal AI. Oh, Fiscal AI. You know, he uses these charts if he needs to build any platforms. He's not going to go on Excel and build a chart. He'll use Fiscal AI. He's not getting paid for them. He's paying for this platform. Fiscal AI. You know, it's a great tool. So, yeah. And that's organic. That's just someone who's paying for the platform to use it. Okay. I'm in Zeta up 120%. Dude, it's crazy. It's done phenomenally well. Okay, I got to go in 8 minutes. 8 minutes, ladies and gentlemen. What do we get into? Do we take a look at the markets? Let's get a little Q&A going. Ask me what you want. OSS pumping again? No way. It's above 30. Okay. Would have been crazy. CoreWeave up 12. Iren up 10%. Nebius up 9.2. Energy Fuels up 7.6. We are so back. And then gold and silver also just like also having great times right now. It's a weird market that we're in. So much fear, so much excitement on the upside. Dan, how much? What's their assets under custody for the Ives ETF? Dan Ives, 1 billion now. What's Granny Shots? Are they at 4 billion? 4 billion. Yeah. Okay. Do you own Zeta? No, I do not. Own any Zeta shares. I have not been bitten by any deers lately. Jeez. How do you guys still remember that? That was one small moment where I was trying to help. Okay? I clearly don't do a lot of hunting. That's funny. Any cautions on ETFs like VDY? I don't play with any of the income maxing, anything like this. Yeah. I'm not really considering Zeta. Not that I'm not like on the hype train. There might be something there. It's just I haven't taken a big enough look at it. And I want to stay to my sort of my strategy of owning the user has done me very well. So if there are AI advantages in marketing, in advertising, and stuff like this, I think that those will greatly benefit names like, potentially a Meta, a Reddit, potentially a Shopify. By the way, Shopify had huge news yesterday with Google. They're building what's called UCP, Universal Commerce Protocol, which is what they're hoping for is sort of the staple or the standard for agentic commerce. So Toby Lucky ended up putting this out on X. He's been weird on X lately. I saw him post. Someone said Shopify should buy Obsidian, and then he said, "Huh? Why would we do that? Why do you think that we would benefit from acquiring Obsidian?" Obsidian's a company that's very similar to like Notion or something like this, like a note-taking app. And the person who said it had like, I don't know, like 1,000 followers or something. And the man who runs the biggest company in Canada is asking him why they should buy another random business. It's so weird that X actually allows us to open up conversation with people that we should have no business talking to. Like, I should never have gotten that interview with Jared Isaacman or anything. That was just purely on X. I just reached out and I was like, Jared, what's going on here? And then he answered and I said, would love you to come on and have a conversation. And he said, okay. And then I sent him a link. It's crazy. It is awesome. I've seen Jared Isaacman do a interview with somebody with like 60 subscribers. I've seen Toby Lucky do that as well. Like, they're not doing it for clout. They're doing it for good conversation. Like, they're just intellectual, curious people. I love betting on those types of people. Anyway. So this is in the AI mode of Google. Help me find a carry-on for a trip to Miami that's hard shell, lightweight, and has spinner wheels. Here's some top-rated ones. Monos carry-on. Literally my go-to, by the way. Best. And then we'll bring you directly on to where you can purchase and complete an order, and then that's all done. Now, the interesting part about that is that the back end is done by Shopify, and then all the people who are wanting to use this universal commerce protocol will immediately have access to two things: Google Pay and Shop Pay. That's the main benefit here, I think, is that the opening up to the hundreds and hundreds of millions of users who already have their wallet information stored via those, email addresses that are assigned to those accounts. It's not a PayPal product. It's not something else. It's Shop Pay. It's Google Pay. More entrants into the payment space that potentially go against what we just looked at for PayPal and their cheap valuation. There was an article that came out recently that said that the agentic commerce space I think it was MasterCard that put this report out, between now and 2034 is going to grow at about 50% compounded annual growth rates, but from such a small base. So keep that in mind. Okay. I have the Monos backpack, super nice. It's fashionable stuff. Okay. Are you voting for or against BM&R voting letter January 14th? Voting for, you have to, or else you have to sell out. Because what you're saying is you don't believe in management. And if you want the product and you don't want management, then own Ethereum. That Google clip can be found on Toby Lucky's X. Okay, 1 minute. Did you get anywhere with acquiring a new chair? No. My back hurts less. My neck hurts more. That's what's hurting lately. That's why I went to yoga as well. I prefer clicking through a dozen times on PayPal than crashing before I could finalize purchase. I don't have that experience with PayPal. I actually find PayPal extremely seamless. But yeah. Did you get paid to promote Monos? So no, sometimes it's actually funny. Sometimes I just like products. Isn't that nuts? Shure SM7B, NVIDIA, Sony camera, Stanley, Shift 4, not paid by any of those brands. McDonald's, best coffee. Get on it. Tanner, I paid for your course a long time ago, but do not have access to the member lives or the discount for Fiscal AI. Does your no, they still do. If you purchase way back, you just need to be on the Discord. So there were a lot of initial course purchasers who did not join the Discord initially. Send me a DM or something like this. Go on the Discord, message me, and I can just upgrade your account. You'll see all that information, where the live streams are. You get access to the Fiscal AI discounts and everything, even if you bought years ago. You're crazy. Tim's coffee is better. You're the only person in the whole wide world that thinks that. Did you talk about Discord IPO? No, I don't know. Like, I don't think that's a name that I would purchase. I love the product. But I don't know how they squeeze money out of me. Like, I, as a creator, have purchased things on my Discord because I get a ton of bots, and so many people try to impersonate me and steal your money. And guys, for real, do not fall for them, please. But they are not, because they're so worried about getting reported and their accounts closed down and everything, that they won't even pay for like a $5 logo. So that's the only reason why I've given them even $1. Aside from that, why do you need Nitro? Like, I don't understand the point of the thing. I like Starbucks too, though. Black iced Americano, dude, it's like drinking an ashtray, and it's so good. I can't express to you how much I like a black iced Americano. I don't like Nitro Brew as much, honestly. It's got a weird flavor. I have power used Discord for years and never spent 1 cent here. Yeah, I don't like, why would I want to invest in that type of business? That's why I like companies like SoFi and everything. It's like you can power use them and they can seem so good. Like Robinhood can be such a great customer experience, and they get loaded off that experience. You know, we offer the best fees in town, and those fees are still super like, you know, great enough to make them a very profitable business. I have a meeting. You're right. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But I will see you tomorrow, or look for a potential video uploaded later. Bye for now.